This is the Financial News Network. I'm Christy Duffy. Many economists are becoming increasingly optimistic about their outlook for 2011. Looking across the economic landscape, consumer demand, business spending, unemployment, and GDP are seeing upbeat forecasts for the new year. However, the housing market continues to be a troubling issue post-recession. Federal Reserve Chairman Ben Bernanke commented last week that the housing market is still shaky. RealtyTrac, the online marketplace for foreclosure properties, took a look back at 2010 in housing and found it was full of foreclosures. Joining us is Daren Blomquist from RealtyTrac. Daren, how many foreclosures are we looking at from 2010, and how does it compare with 2009 foreclosures?
Sure, yeah, we saw a record number of properties nationwide receive foreclosure notices in 2010, 2.9 million nationwide. That was up from the record we set in 2009 of about 2.8 million. So it wasn't a huge increase, but we're not out of the woods yet. We're still basically heading upward and have not quite peaked in terms of foreclosure activity nationwide.
And which states across the nation did have the highest amount of foreclosures in 2010?
Well, the states with the highest foreclosure rates were mostly the states in the West and what you might call the Sun Belt states. So Nevada was number one with the highest foreclosure rate, followed by Arizona, California, and Florida. And those all had foreclosure rates that were more than twice the national average.
And what are the projections for home foreclosures in 2011?
Well, we're expecting, at least nationwide, the numbers to be, unfortunately, a little bit worse in 2011 than they were in 2010. We're expecting over 3 million properties to receive foreclosure notices in 2011, and we are projecting that probably 2011 will be the peak year nationwide, and then we'll start heading downward in 2012. However, that said, it's still going to take anywhere from 2 to 4 years for the nation to return to what would be considered a normal level of foreclosure activity.
All right, and foreclosures have continued to drag down home prices. Any projections on home values and how they may be affected, since you're projecting that we won't see a recovery until 2012?
Yes, I mean, that's not, we don't directly track home price data, but basically foreclosures are closely related to home prices, and because we're going to continue to have a pretty high level of foreclosures in 2011, we don't expect home prices to appreciate significantly during the year. I know a lot of economists are predicting that at least they'll bottom out, which is a start. You have to bottom out before you can start appreciating. But yeah, the foreclosures will keep home prices from accelerating very quickly until we've really cleared out the inventory of foreclosures. It's really built up over the last 2 to 3 years.
All right. Thanks very much, Daren.
No problem. Thank you.
Daren Blomquist of RealtyTrac.com. For further updates, stay tuned to the Financial News Network. I'm Christy Duffy.